Welcome to RBC's Markets in Motion podcast, recorded August 21st, 2024. I'm Lori Calvasina, head of U.S. Equity Strategy at RBC Capital Markets. Please listen to the end of this podcast for important disclaimers. The big things you need to know? First, 2Q earnings season is ending up pretty solid. With most reports in, we highlight a few of the most interesting charts in our deck on earnings right now. Second, other updates on our high-frequency indicators were generally positive for U.S. equities and mixed for the rotation trade last week. We end the summer of 2024 with increased conviction that August 5th was the low in the recent pullback, even if some choppiness seems likely to be there to greet us when we return in September, and we're leaving the summer feeling pretty good about our 5,700 year-end 2024 S&P 500 price target. If you'd like to hear more, here's another 5 minutes. Let's start with takeaway number 1. 2Q earnings season is ending up solid. Last week's relative calm in earnings allowed us to see how a few stats that we don't watch closely on a week-to-week basis have evolved. Here's what jumps out. One interesting chart highlights to us how Russell 1000 companies in most sectors that beat consensus earnings forecasts outperformed after doing so. The exceptions, however, were energy and consumer discretionary. We think flows and macro overwhelmed earnings for these two sectors. A second chart in our deck highlights how stable bottom-up EPS forecasts for the S&P 500 have been, and how unusual that is. That hasn't been the case within the S&P 600 small caps, however. In that highest quality part of the small cap segment of the U.S. equity market, the decline in bottom-up EPS forecasts has been in line with the median cut over time. A third chart takes a look at how trends and layoff discussions in the media differ versus those in earnings calls. There's always a gap between the two, but that gap has widened in recent years, with media amplifying what companies are discussing. This is a good reality check about the state of the labor market, in our opinion. It's also worth noting that in terms of company commentary on earnings calls, the recent reporters left us remembering how during COVID and its immediate aftermath, many companies talked about demand that was delayed but not destroyed. We think things may be similar today because of interest rates. While a few more companies will report later this month, our overall assessment of the 2Q reporting season is that it was pretty solid. We'll move on to takeaway number 2 now. Other updates from our high-frequency indicators have generally been positive for U.S. equities and mixed for the rotation trade. On the broader market, net bullishness remains in neutral territory on the weekly AAII survey, despite the rebound in the S&P 500 over the past few weeks. We've also dusted off our chart on correlation within major indices, and we're intrigued to find that the Russell 2000 correlation got close to post-COVID highs earlier this month, perhaps another sign that bearish sentiment just got too extreme. Consumer sentiment on the University of Michigan survey last week also rebounded and came in ahead of expectations, a good data point for both the S&P 500 and Russell 2000, as year-over-year performance in both indices has been tracking this indicator closely post-COVID. The improvement in the sentiment gauge was driven in part by better sentiment among Democrats and independents, which was offset by worse sentiment among Republicans. On the rotation trade, where growth has bounced back, valuations remain more compelling in value, and positioning remains extended in growth per CFTC data. However, earnings revisions have been stronger in growth and value, including the top 10 names in the S&P 500 by market cap. The great debate over the fate of the rotation trade seems likely to rage on this fall. Valuation, unfortunately, doesn't settle the score between the two styles. The median PE of the top 10 names in the S&P 500 has rebounded to more than 26 times, but does remain well below recent highs. That's all for now. Thanks for listening, and be sure to reach out to your RBC representative with any questions.
This content is based on information available at the time it was recorded and is for informational purposes only. It is not an offer to buy or sell or a solicitation, and no recommendations are implied. It is outside the scope of this communication to consider whether it is suitable for you and your financial objectives.